Hello everyone and welcome to a new ATFX video. My name is Gonzalo Cañete and I'm here one more time with you to share the last updates in relation with a new company, in this case McDonald's, just before the earning results to be published this week. I would like to review the company with you. I would like to also see what was the main challenge they have been facing for the last few months, the weakness they experienced for the last few months. What is the future of the company? What's the plans they have from a financial perspective and the progression of the business? And by the end, as usual, a technical analysis giving to you the most attractive entry prices, and in case you are already holding this company in your portfolio, what could be the evolution of the price movements in the coming days. Now, before we start, if you are not subscribed to the channel, the main question is why not? Click on the subscription button, click also on the bell to receive notifications anytime we update new market reports, and which is something we do weekly and really often. So you better subscribe and click on the bell to don't miss anyone. Now let's go to the presentation and let me share with you the screen and give you a quick update. So this is about the Q3 2025 review on earning reports for McDonald's. The report to be done by 5 of November before the market opens. Consensus expectations is between $3.33 to $3.35 EPS, and with an expectation of 7.07 or 7.09 billions in that range of revenue as the company navigates recovering from Q1 challenges whilst balancing value posing against margin pressures. We are going to analyze what kind of challenges are those ones, and most mainly, right, what was the solutions they were trying to play, and so far it seems to is working. 185 million of customers, loyalty members, because 90 days active users driving 33 billions in trailing of the 12-month sales. So as you can see, it's still really active in the last 90 months. We're also going to see the models they have doing by online platform for ordering meals, which has been apparently a really successful strategy because mainly the orders are coming from the online platform. 2,200 new restaurants in 2025, expanding target representing 4% net unit growth, 93% franchise model generating 84% operating margin on franchise revenue versus 15% of those restaurants under central management. So again, is the whole model of McDonald's for many years has been working on this franchise model. 93%, as I say, it's doing really well. 3.8% of growth in Q2, global composition, digital transformation, and McValue platform reversing early weaknesses. They recovered from Q1 on Q2 with a 3.8% growth based on the online platforms to order meals through the app. Digital and loyalty, between 3 to 40% of US sales through digital channels. Members visit 26 times per year the restaurant versus those ones with old platform, those ones who are not using the app to visit the restaurant, which is 10.5 times per year non-members. So again, it seems to be a successful strategy, the one they implement through the McDonald's app to order your meal. McValue platform, remember they launched a few months ago this $5 meal deal just to fight against inflation. The inflation was coming from 2022, 2023. So $5 meal and buy one and have one for $1 driving, which is a 50% off in the final price. US visiting since January launch. So since January has been increasing 50% the new visits on the restaurant. International expansion, target to 50,000 restaurants by 2027, including 1,000 new locations in China during 2025. The most interesting point I just put there in highlight just to don't forget. Menu innovation include McCrispy chicken strips, 2.99 snacks wraps, and extra value meals targeting 15% price reduction to combat 40% menu inflation since 2019. So in order to fight inflation that US citizens and mainly the rest of the world, including Europe, has been facing, they tried in US to reduce 15% the cost of the menu, the value, the price of the menu, to combat the 40% inflation by default since 2019, and therefore to make more competitive the meals. Bullish case, In case of the franchise model with 84% margin, franchise revenue insulates profitability. Digital platform, 185 million users in the digital platform, driving a 33 billion annual sales. An aggressive expansion position McDonald's to capture market share in value-driving environment. So it's again a new way to gain over the competitors. Key risk is promotional spending. I mean, 40% menu price inflation is risk of margin compression, low income consumer pullback. So the risk of this cut on the prices could also generate or delivery short revenue or margin revenue on the top of the products. Critical catalyst: Q3 comparable sales, particularly US traffic trends post snack wraps, McCrispy launch will signal whether value strategy successful re-engage customers or if structural affordability gaps persist from Q1. And now in terms of charts, as you can see, in long term, we have seen the last 10 years of the price of the company has been bullish. You can see a nice and clean evolution, apart of these exceptions in 2020 because the economy was closed, and the summer 2024, we got also a drop in the general market. But overall, we can see that the company has been doing well. If you bought this company years ago, you most likely are making profits on the top of the price. But now we have to face also the challenge of get the price about $300 per share, which is not easy because for the last year we have been in this short-term chart. We can see this clearly, right? All in 2025 we have been between $320, $21, $22, even $25, doesn't matter, between $320 to $285. That's the range, that's the price. I believe it still is a bullish trend on the background, but this also the challenge to keep moving forward. About $320 seems to be hard, right? So I will say in this case we keep on hold, we wait until we see the earning results. I will see attractive this company in terms of new positions, buy new shares in this company only if I see the price dropping below $295, $285, all of this area, right, until 285, between 290, all this area. It's a new area for new opportunity to hold new positions. So far in the last few months we have seen also a downtrend with new top maximums declining the price, and therefore I believe the future, the target is over past $320, but taking positions in those levels from $295 to $285. In those low areas we could increase the position and wait until we see that the new barrier, the new resistance of $321 is passed. That's all. I believe it was short, but it was clean, and I hope it's useful for you as investor. And again, if you want to get any other reports, leave me the comments on the bottom of the video, and I will see you in the next ones. Bye bye.